Yeah, good morning, Neeraj. See, I think one thing which we need to understand, Neeraj, is in the last 2 years, the auto market was largely a supply-driven market. There was a huge supply crunch of the top-end models from Mahindra, from Maruti, and that was the reason, car manufacturers, specifically, vehicle manufacturers, which were running a large order backlog, were actually commanding a premium on their vehicle prices. But I think now what has happened is that production capacities across companies have gone up, production levels have gone up, and now demand is, the entire car market is driven purely by actual demand. And therefore, these premiums are now, going to vanish. That is the reason, Mahindra and Mahindra took a price cut. I think we could see this happening for some of the other models also. And I think it's not a surprising fact, considering the fact that most of the auto companies prefer to keep their vehicle prices pretty attractive, because that's how the volume growth actually kicks in for these vehicles. What happened in the last 2 years, typically, Neeraj, was something of a aberration. I think it won't continue in future. So I think your point, whether this will continue for some more time, yes, it will continue, and we'll have to see normal, realistic demand levels now coming in, because what was happening in the last 2 years was supply-driven demand, and that was the reason these companies were making better than expected margin. So definitely there could be a little bit of margin crunch. At the same time, I think now the entire focus of the car, vehicle companies would be to focus on pure volume growth, because if that continues, which I think has not yet been badly impacted, we could see normal growth, but the markets would definitely be a little disappointed, because whenever the companies cut down prices, that means a little bit of ease on their pricing power. So I think all said and done, Mahindra, Tata Motors, Maruti, my guess is that you could see a little tepid numbers from the July to September quarter, considering the fact that price cuts now could be little more active and little more significant compared to what we have seen in the last, say, 12 months. So I think net it's good longer term, but in the short term, I think stock prices would continue to remain slightly under pressure. Yeah, I think if you look at the oil marketing space, we continue to be positive on this segment, considering the fact that crude prices have remained benign and fairly stable for a long time. And unless there are other kind of geopolitical kind of issues, I think the outlook for crude oil price looks to be pretty stable. And if that happens, then I think companies within the oil marketing space like HP, BP, definitely could definitely be considered as a good investment, considering that two key sectors, automobile and aviation, have been showing pretty strong volume throughput growth. So this is definitely going to benefit them. Another energy sector where we are positive is the gas sector. I think of late there has been a lot of action on the gas companies. So I think companies like Gujarat Gas, Indrapas, Gujarat Gas, MGL, one could also look at these companies, considering that there are expectations that in the coming budget some duty structure alignment could happen. And I think government is also focusing on clean fuels. So that also goes a long way in ensuring that companies which are into the CNG and PNG segments would definitely also benefit. So I think these could be opportunities in this kind of volatile market, for a medium to time longer term kind of time frame. Yeah, I think Neeraj, looking at the fact that earlier, about 2 to 3 months back, the news flows about fresh competition had actually beaten down the existing players like Asian Paints, Kansai Nerolac, Berger Paints. But I think competition is yet to make a big dent, and I think it would at least take 2 to 3 quarters before we could see any impact on market leaders like Asian Paints. I would also be more positive on Kansai Nerolac and Asian Paints. Typically, this is the start of the financial year. So I think you could see a little bit uptick in the volume growth of these companies. And I think, raw material prices have been also been benign. So I think clearly with the kind of growth in the real estate market, construction activity have picked up, plus domestic automotive sales have also done very well. So I think, companies like Asian Paints, Kansai Nerolac, which have got a very large exposure in the industrial segment, I think looks definitely promising, and I think valuations have also come off a bit. So I think somebody who wants to take a 12 to 18-month view can definitely start accumulating now. Definitely margin improvement comes in, and which is accompanied by good volume growth. That could be a kicker for the companies going forward. Yeah, I think if the investment time frame is slightly longer term, I'm not stat in the positive in the short term, because the stock has already moved up. But I think key triggers like the Geo IPO, which is going to unlock a significant amount of value to Reliance, is obviously going to come at a decent premium. They have been getting the benefit of increased ARPUs, plus I think a large customer base. So I think markets were expecting that earlier the retail business could possibly go for a IPO offering first. But I think if the Geo offering comes in early, then I think probably the premium, which is now being given to most of the telecom companies, considering the kind of buoyancy in telecom, market, to definitely benefit the overall valuation for Reliance and Geo. So I think definitely around 3,000 odd rupees would be a good entry point. Despite the fact that in Reliance, I think we would suggest to buy slowly and obviously put a SIP approach, because I think over the next 12-18 months you could see a lot of value unlocking initiatives coming in, which would obviously add a lot of upside to the stock going ahead. Companies which are having a very strong geographical presence. I think the larger players, I think something like Ambuja Cements, typically an ACC, typically an Ultratech. I think we still continue to be more positive on the larger players, because the raw material price benefit is going to actually help these companies, and plus pricing power is something which actually benefits companies which have got a good geographical spread and which have got a large capacity. So I think we continue to believe that pan India geographical coverage is very important, size is very important. So I think it's better to bet on these two, three companies. And I think once the quarterly numbers come out, hopefully, April to June should be a good quarter, and thereafter, the monsoon kicks in. So I think the second half for these companies is going to be a lot better. And whatever announcements do come in the budget, there are broad expectations that infrastructure would be given a further boost up in this budget, and that definitely would play a big role in ensuring that a lot of new projects get assigned, and obviously cement as a kind of a sector benefit. So I think Ambuja and Ultratech, as well as typically larger players like even in the south like Ramco Cements, these are companies which I think one can gradually accrue. It depends, Neeraj, on what price you have entered. But I think for a long-term investor, wealth creation has been massive for this stock. And I think one thing is very clear in the explosive market, they have a large market share, and plus they are large suppliers now even to the Indian defense market. So I think, the markets are clearly looking at these two triggers with infrastructure, spends increasing, specifically with Coal India increasing its production. My sense is that both these factors are going to play a very important role, and clearly this being a monopoly business, not many companies come near to it in terms of their technical expertise, in terms of their geographical reach. I would believe that somebody who's got a 2 year kind of time frame should definitely hold on, because as long as the earnings growth story continues to be rock solid, there's definitely a good scope for this stock to get further re-rated. The market loves it, and I think the management has also been very focused. Clearly, I think these are two factors which are quite positive for the stock going ahead. I think clearly, IT is in momentum, and my sense is I think we've been telling our clients that stocks like Infosys, typically an HCL Tech, or typically even a Tata Technologies, these could be good defensive bets, considering the fact that they have turned very attractive in terms of value. I mean, the growth quotient still seems to be missing, and I think investors who can take a bet for the next say 6 to 12 months would definitely look at these companies. I would believe that once the Q1 number comes out, the commentary comes in, we could get a lot of sense of assurance and conviction as to what is happening on the ground. The US market continues to be challenging, and I think considering the fact that the macro commentary continues to be a little cautious, we'll have to probably wait till September, and only then we could see stronger earnings numbers kicking in. So I think as of now, maybe somebody who's got a very long-term kind of time frame and wants to allocate say 2-3% of his portfolios can definitely look at Infosys, TCS, or Tata Technologies. These are all defensive bets, but yes, the real growth quotient could come in only post September.